I want to bring up Boeing, if I can, Guy, because I know you're not a single stock analyst, but as I pointed out at the top of the show, Boeing was a $400 stock last summer. It closed today at 129 and change. They have huge defined pension benefit guarantees to their employees who deserve and will get those pension plans. We've talked about the negative book value of $9+ billion on this name. At some point, will there, and I'm not saying Boeing is it, will there be generational buying opportunities in some of these stocks?
100%. No question about it. And, obviously, something that we mentioned, I remember a few months ago, I think, when you came in from Melissa, we had talked about things. One of the things we said, there were at least 20 different indicators that were flashing red, but the broader market, for whatever reason, was looking past it. But one of those indicators was the Buffett indicator. I think, the Wilshire over the S&P, I think it was trading like 150-something%. And the fact that Warren Buffett had, I want to say, about $128 billion or so of cash. So, the question that we posed is, if Mr. Buffett is sitting around with cash, what does he see? So to answer your question, and I know a lot of people have said this, I'm not splitting the atom here, I'm not trying to, but if you see him start to dip his toes or his group start to dip their collective toes into names, maybe then all of a sudden he's giving you the all clear sign. But, the equity market, again, without going down this rabbit hole, when you look at the VIX where it is, so many people became complacent in the derivatives market with this belief that the market will never go down again, that the Fed has our back. And that complacency does not unwind. And we've said this, it doesn't unwind in the matter of days or weeks. It takes time. You're talking about 6, 7, 8 years worth, and I'll use the word because I think it's important, of hubris on the accounts of a lot of these derivatives traders, and it doesn't get washed out overnight.
No, and that's what I think a lot of the casual market observers don't fully get, Guy. You and I have been doing this 25, 30+ years each. It used to be you shorted a stock. Now you short the stock, you short the ETFs that have the stock, and you buy a triple inverse, whatever it is, against that, all, by the way, at 3, 4, 5, 6 times leverage. That's the unwinding that we are seeing right now.
And that moves, the moves are exponentially greater on the downside than they are on the upside. And, and I don't want to go down this inside baseball wonky stuff, but what I'll tell you, with volatility at these levels, as likely as you are to see a day like today, you're as likely to see a day to the upside for people that are chasing. And again, the lower it goes, the more these participants have to sell. And conversely, the higher it goes, the more they have to buy. So don't think if we're up 2,000, 3,000, 4,000 Dow points on any given day that somehow this is magically over, because I don't think it is. Again, my tell is stabilization in the credit markets, whatever levels they are.